Hi, this is Mac with PriceActionTradingSystem.com, and this is Monday, September the 17th. This will be our chart lesson for today. And first things first, we did move over to the December contract, ES contract here in the office today. Normally we don't switch on the first day or two. It just depends on the volume, but you can kind of see there wasn't any volume in the September contract, so it appears that most of the volume has moved over now, so we did move over as well. And but we usually don't move over the first day. I got a bunch of questions on that, so I thought I would address it. But normally we don't move over on the first day. We wait till there's sufficient volume before we move. We continue to just trade whichever. If the old contract still has more volume, we'll trade it, and as soon as the volume moves over to the new contract, we'll switch over. So that's generally how we approach that. So but anyway, let's talk about the trades. We had this down channel, but you can see we spent most of the day in this wedge here, but this is the top side of the channel. It was kind of left over, kind of got it off the first couple of swings from Friday, and normally we don't get it that way, but when you drew it there and right at the open we turned down off of that, and then if you copy that line and drag it down, you can see it fits pretty good right down through there. So you probably even had it's probably more like that right there, to be honest. And so you can see that was a perfect channel. We bounced off the low of it. That's where we were headed. It took most of the day to break it lower. And when we got stuck in this, I almost closed up for the day and just called it a day. But I kept thinking, we're going to turn down any time now, and there's a lot of room for the downside if this is indeed going to be the channel. And you can see that's exactly where we went to. And so now we're headed back to the upper side of the channel. So it's obviously a good channel, but you couldn't ignore this line up through here. So this is just a little wedge pattern. And most of the trades today were shorts off the top side. I did enter one long here. There was probably another one here, but you had to enter above a really bearish bar there. And I just don't like that. And by the time this bar finished, we're back to the top. So it was just a little questionable. But not sure if you took that trade. If you took it, it was okay. Wasn't a great setup, but it was okay because it was a two-leg correction that came off the low side of the support area, and that's just like buying any other support or resistance. It's a key entry spot. So if you took it, no problem. And by the time we got in here, it was just there wasn't enough room to do anything unless you were buying and selling that blindly, which I don't recommend you doing unless you got a lot of experience. So best just to skip those trades. I'll be honest with you, I didn't buy or sell anything in here, and I didn't go short. I actually went short here. I didn't mark that one because, again, it's a little iffy with all that overlap, but it's good enough to be a breakout pullback short. If you entered below this one of the, right in here, but if you didn't enter here and you waited to here and here, it probably was not as wise to enter here. So I entered below. My reasoning was below this bar. A breakout pullback short, and I almost exited right here, but because we couldn't get back above this, I felt like we were going to eventually break lower, and we did. And then there was a two-legged pullback to the EMA here. This is a double top. I didn't draw my line here. You should have had a line right across there, like so. So you did have a double top right here. However you want to draw it, I usually use the closes. And then another two-legged pullback to the EMA right here. This held on off. So let's go back here to the start. This was just after the open this morning, and I had this line on here, not knowing if it was any good or not. But really what I was looking at was the gap that we needed to fill. And I talked about this gap some last week. But anyway, this is where we closed on Friday. And when we opened at 8:30, anything below that is a gap, and so usually prices will try to fill those gaps. And let me just see if I can I think this will have to reload for me to show you this. Let me show you a regular trading hour chart, because I think it gets confusing for some people. All right, we're loading the regular trading hours in. Maybe we can see that gap, and because I think it gets confusing to people when I start talking about this gap, because they don't understand. For some reason, a lot of new traders don't understand what I'm trying to tell them. And there you go. Now you can see it. This was the regular 8:30 open, and you can see where we closed the previous day, and this is where we opened. So there's a gap in there. Now you don't see it on the extended chart, but it's still relevant. It's still a relevant gap, and you got to take into account for it. I know, I know to look for it on my extended hours chart, and there's actually some indicators and so forth you can put on there that will draw them for you, so you know where they are. But there you go. There we are back. This shows the overnight action in there too, and you can see we came up and filled that gap right there from Friday. So so that's what I'm talking about. So even if you didn't have this line here, you had this gap, and that filled it right there at the open, plus it's a break out of all this overlap. So you got to be figuring there's the gap right there from the overnight. We had to come back to this line, and you see we hit that and we closed right below it and then turned down, and there's a little gap right there too. Notice there's no overlap. So it's a nice easy scalp. If you kept any runners, they weren't safe, because we came back and got them right here. And so hopefully that gap makes sense to you now that I showed you that. And so even if you didn't have that line there, you did have the gap to kind of keep you. And if you put your line there, then you see both the you see that there's confluence there, so that makes it even stronger. The trend line's there. We closed below that, so that's a great place to enter short right there. And that was an easy trade, and you should have gotten a few points out of that, 2 or 3, 4 points maybe. Entry was 58, and it went all the way down to 50. So you should have gotten a couple of points out of it anyway. Once we went into all this overlap, you should have exited, because then it should have been pretty clear we were bouncing off this trend line right here. And you actually could have gone long right here, although I don't recommend it, because you didn't know if we weren't going to make another leg down right here, because it did look like we were in this trading range right here, or this trading channel. And there was actually, show you this too, another thing back to this trade. Here's leg 1. Your little correction right there, and then leg 2, and you look, that's a nice little measured move right there. So that's a second reason to enter right there. Same kind of thing right here. You got one leg, pull back, and then another leg. And of course there's a couple of, this is a real choppy leg, but it's still a leg all the same. This is a double bottom, a breakout pullback long. So it's a double bottom pullback long, a breakout pullback long, and a second entry long coming off these matching lows down here. So a couple different reasons to go long there if you like that one. There is enough room to scalp out, but barely. And so I'm not sure how you handled that one, but anyway. And even if you didn't get this line off of yesterday's, you should have got it off today's, because if you start it right there and come across this one, you see it still worked out. We might have had to change this one just a tad. Let's just do that in case there were some people that did that, because you can see you still get the same thing. So still gives you the same channel. So there's usually more than one way to get to the final answer. But again, we already talked about these shorts. There's your reversal, 2 legs up coming off the top of the channel. Again, 1 leg pull back, second leg, so another 2 legs up. And I did go long right there on this trade, and worked out. I had to wait on it a few minutes, but it worked out. I didn't take any more trades in here though, because it just got too tight and too choppy, and the only way to really do it was to buy and sell blindly, and you only got one chance to sell it blindly, even though you got a few chances to buy it. So Then there was another short right here, and again, I didn't mark this one, but I did take it because by the time, if you didn't enter below this bar right here, by that time there were just too many overlapping bars to make it a safe entry. And you can see it didn't go very far. It stalled and tried to come higher and so forth. And then this is just there's a new low, pull back, try to go down again, and then back up to a high. So that's a two-legged pullback that tests that breakout area across there. Two-legged pullback, didn't quite get back to the EMA, but it's still a good trade. So there's a short right there. Tested this a couple of times, and another easy short. And there was a long trade here, but again, the trend is down. This is in a channel. We haven't quite made it to the low, so it's risky going long. You can see it would have worked because there is a breakout area that comes right across here. So you should have been figuring that we were coming back to test that. And so I didn't mark that, though, because there's a lot of overlap, but it's way away from the EMA. And usually it's better if prices tick lower below that overlap and then turn back, which we didn't get that. They couldn't take it any lower. There was too much buying pressure right there. And that was a really fast bounce. Easy money there. So again, I didn't mark it for the reasons I just discussed, but if you saw it and took it, great eye there. Then this is a double top. Anytime you get a double top at the EMA in a downtrend, just about always good for a scalp, and you can see it was an easy scalp, and then we went back into this trading range. But notice this, we had a new low, pullback, first entry short, pullback, second entry short. So that's a nice second entry short coming off the EMA. Notice how each of these pullbacks, you get a little lower high, so a nice setup. And there really was a breakout pullback short right there as well. Still enough room to get out before you get down here, and you can see it would have been another scalp. I didn't mark it because it really was too late in the day. It was right at 4:30 before that set up, and so I didn't mark anything past this point. And that was pretty much it for the day. It got really tough right in here, and this is where you got to learn to be patient. From 10:15 really to 12:30, there was nothing. That's 2.5 hours. You got to be able to sit there and watch prices do this, because if you entered in here, all you probably did was get chopped up unless you held short. Unless you entered short and held short, which is dangerous because this thing could have easily broken this higher just as it broke lower. And there's really no way to know right there how the prices are going to react out of there. And you just have to follow the price action, and that's why following the price action is such a good trading technique, because as you see there, you don't know what's going to happen. But if you followed the price action, there's your breakout pullback short. We broke lower, we came back, tested that line, we came back, tested the EMA, and then we turned down. Same thing here, same thing here. So if you're following the price action, but you got to be able to sit tight and be patient. And really, from about here on, anything was suspect because it's getting so tight. There's just not a lot of room in there. There's not much room to do. Even if you bought and sold that blindly, there's not a lot of room in there. So you got to get a really good entry right at the edge, and then once you get up to the top, once you get up there, what would happen was it dropped real fast every time. Look, it looked real bullish, and then boom, it fell down, it climbed back up, boom, it falls down, it climbs back up, boom, it falls down, struggles back up. But notice how quick it falls every time. It really struggles to go up, and then the down moves are real quick. So that's a telltale sign that the market could go lower. But you never know. And you notice too how prices are all right in here. They start to work below the EMA, and most of your closings are below, even though we still got closes on both sides. And that's about as flat as an EMA as you can get. And when you see the EMA flat like that, don't enter a trade. Just wait. By waiting and entering short down here, it was easy pickings. But you had to be patient. You had to sit on your hands, and you had to force yourself not to enter in here. And that's what happens is people are looking for a trade so badly that they talk themselves into entering in trades in here. And this is where you separate the really good traders from the so-so to bad traders, is because those guys don't have the patience to sit for 2.5 hours and not take a trade. It's really hard to do. And here's another area right here from about 8:40, right after the opening, all the way to 9:30, so almost an hour you had to wait right after the opening. If you didn't catch this move, you had to sit here for another hour and do nothing. Unless you bought down here, you could do nothing. And then you had a couple of entries in here, and then all of a sudden, boom, it starts going into this stuff again. And really for about 2.5 hours, you could do nothing unless you just were taking a chance of buying and selling, and then you're betting on luck and not on, you're gambling. And we don't gamble when we trade. We only want to take sure bets, and there's no sure bets in there. And even once this broke lower here, if you didn't enter right here, you were gambling if you entered over here, even though you were at least getting on with the trend. And again, the clues that we might go lower is look how hard it is for prices to work their way up, and then look how fast they fall. And then look, it works real hard to get up, and then boom, it drops right off. And it works its way up, and then when you get in here, there's just no room to even move, so nothing happens very quickly. And it's just a matter of waiting until you know the closer it gets to the end, you know the closer you're getting to where you're going to get a trade opportunity, but you just don't know where that's going to come into play. And you just have to be patient. And if you don't do anything else, get up and take an early lunch. Go take your lunch early. Get up and go walk around. Go get yourself a drink, a cup of coffee or something, and then come back in 30 minutes. Because if you'd come back, then it's starting to move, you see, and then you had a chance to figure out, hey, we're going lower. We're all below the EMA. All the pullbacks are shortable until, guess what? We hit the lower side of the range or the channel, and then we rally from there. And this was a nice rally, but it's too late in the day, so I don't recommend taking it. But hopefully that all makes sense to you. And again, I talked about trading contracts today. We are trading the December contract now. It appears that all the volumes moved over a little. It seemed to be a little quicker. Usually it's a few days, but I believe this was the second trading day, or maybe the third. Maybe it's been a few days. I don't know. But we didn't switch over till today. We've been trading the other contract till today, but we moved over to December today, and we'll delete our September contract and move on. But I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com. Hope you had a good trading day. Hope you had a great weekend, and we'll see you next time.